to JPX Energy Market Weekly Updates. While there are still plenty of supply risk extending oil prices soaring, bearish sentiment has taken over oil market last week due to falling expectation of a global economic slowdown. Crude oil futures tumbled on Friday after U.S. Federal Reserve Chair signaled aggressive interest rate hikes in the month ahead. The Fed's increasing aggressive stance in recent weeks on tightened monetary policy has rattled financial markets and raised the possibility of the economic recession as tighter credit spur consumer companies to rein in spending. This seemed to highlight the heightened risk of restriction on economic activities brought about by policy tightening and have a soft landing may be harder than the market previously expected. According to the economic growth and inflation situation, Merrill Lynch's investment clock divides the economic cycle into 4 different stages. At each stage, the performance of the asset classes identified in the chart tends to exceed that of the big market, while the income of deposit asset classes will be lower as shown in the figure. The classic boom-bust cycle starts in the lower left corner and circulate clockwise. Bonds, stocks, commodities, and cash outperform the market in turn. But it's not often that simple. Sometimes the clock moves counterclockwise or skip a phase, but the analytical framework of the investment clock is still helpful for investors to identify the important inflection points in the economy and profit from the change of a cycle. Nonetheless, near-term intermonth spread of the future bank marks continue the rally. Spread of JPX Dubai crude oil contract for July and September delivery was last traded at 2,550 yen, or equally $3.2 per barrel, up from $2.9 from the previous close. Oil prices likely to stay elevated for now, with no end in sight to the war in Ukraine and European Union nations making plans to phase out Russian oil. Besides, oil production in Libya is set to drop due to civil unrest. Over the past week, Libya National Oil Company has added a series of oil export terminals and oil fields to the list of oil facilities currently under force majeure. For now, it's estimated Libya has lost around 400,000 to 500,000 barrels per day of production due to port closures and field shut-ins to include its biggest oil field prior to the latest declaration. Despite production averaging 1 million barrels per day in the first quarter, in 2004, after the election, 2 rival governments emerged and oil production was capped below 500,000 barrels per day for nearly 2 years. The good news that might mitigate supply tightness in the Mediterranean region is that the oil loading at a second 3 single-point mooring system on the CPC network at Novorossiysk has resumed, according to the company statement on the weekend. Loading at CPC, which is Kazakhstan's key crude export route, was suspended March the 23rd following storm damage, which is estimated to have led to a 320,000 barrel per day drop in output in April. On the west of the Atlantic Basin, the United States crude and petroleum exports surged to an all-time weekly high of 10.6 million barrels per day during the week ended April 15. Crude oil production also rose 100,000 barrels per day to a 2-year high of 11.9 million barrels per day. Despite calls on U.S. oil firms to ramp up production, many producers are being plagued by rising costs and supply chain bottlenecks. So U.S. tight oil production is not rising as fast as in previous upcycles, whereas demand for U.S. oil remained robust. Traders expect export to remain strong heading into this summer. In terms of inter-regional spread and trade flow, the spread between JPX Dubai and IC Brent is likely to remain supported by structural shortages of medium to heavy sour crude. And with oil demand in Asia expected to stage a sustained recovery, it's estimated that Asia needs some 1.1 million barrels per day of additional crude this year for runs. Trade flow data also shows that China's dependence on Middle Eastern sour crudes has grown sharply to meet the feedstock requirements for new facilities, and there seems to be some light at the end of the lockdown tunnel. Okay, that's all for this week. For more information on the energy market, please stay tuned for JPX Energy Market Weekly Updates.